Have you wondered why the cost of a plane ticket, a plastic phone case, and a box of strawberries might all jump in price on the exact same day? Even though they seem completely unrelated, those items are secretly tethered to the exact same underlying cost: petroleum. Crude oil is the raw material melted down to create the plastic surrounding your phone. It is heavily used to manufacture the fertilizer that grows your strawberries, and jet fuel alone makes up nearly a third of an airline's operating costs. Because of this, oil acts as a hidden tax on human activity. When the price to pull it out of the ground moves, the baseline cost of manufacturing, transporting, and growing things moves with it. But oil is not a single, uniform liquid with one simple price tag. There are actually hundreds of different grades of crude scattered all over the globe. To make sense of it all, buyers and sellers rely on two global scoreboards. Looking at the map, you can see these main benchmarks: West Texas Intermediate, or WTI, and Brent crude. WTI tracks the price of domestic oil pulled from the United States. Brent crude, coming from the North Sea, has a much wider reach, setting the pricing baseline for Europe, Africa, and the Middle East. These two numbers dictate the financial rules of the game. They set the standard that nearly every producer and buyer on Earth must follow. The largest players in this system belong to a 23-nation group known as OPEC+. Together, these countries control roughly half of all the oil pumped globally. Think of their primary tool like a massive control dial. By agreeing to a strict quota, a set limit on extraction, they artificially shrink supply, forcing prices to rise. But holding that line is difficult. Members frequently cheat on these quotas, quietly pumping extra oil to capture more revenue. So the number you pay at the pump is heavily engineered by the decisions and the internal disagreements of this geopolitical alliance. There is another, more hidden rule to buying oil. No matter where you live or what local money you earn, you must buy oil using United States dollars. You can trace this all the way back to a specific agreement in 1974. The U.S. offered Saudi Arabia military protection, and in return, Saudi Arabia agreed to sell its oil exclusively in U.S. dollars. The result is highly structural. Because every nation needs oil to keep the lights on, every nation is forced to permanently hold and use U.S. currency to pay for it. This arrangement, known as the Petrodollar system, creates massive built-in global demand for American money, allowing the U.S. to sustain large trade deficits without crashing its economy. The final group manipulating the scoreboard never touches a physical barrel of oil. They are the financial speculators on Wall Street, trading paper oil. They operate in the futures market. Here, buyers and sellers trade contracts for oil to be delivered months from now. That means today's price is actually determined by what traders predict the market will look like in the future. If a news headline suggests a potential conflict or an economic recession, these traders react instantly to protect their money. They bid prices up or down based on pure anticipation. Financial sentiment and human emotion drive the cost of your morning commute just as much as physical scarcity does. Let's watch how these three forces react together. A sudden news alert about geopolitical tensions hits the wire. Wall Street traders panic, instantly bidding up the price of oil contracts. Seeing prices rise, OPEC+ might opportunistically tighten their production quotas, actively starving the global supply to maximize their profits. Finally, importing nations must scramble to acquire enough U.S. dollars to afford this newly expensive crude, straining their local currencies. Now, a shift is beginning. As more people choose electric vehicles and renewable energy, the long-term global need for oil is slowly pulling back. However, overhauling the infrastructure of modern civilization will take decades. For now, petroleum remains the deeply embedded foundation of global commerce. The next time you pass a gas station sign, remember that those numbers represent the outcome of a massive, ongoing game between global cartels, currency laws, and financial gamblers. To see how these same forces drive up the cost of everything else you buy, check out our video on how inflation actually works.